Two giants, $17 trillion, and one secret that is about to tear Wall Street apart. Meet Arthur, 62 years old, a senior architect from Chicago. He did everything right. 40 years of grinding, maxed out 401k. He is exactly 6 weeks away from retirement. He dreams of a quiet cabin in Montana. Tonight, Arthur is staring at his iPad in a dark kitchen. The screen glows green. His account is at an all-time high. The S&P 500 is smashing records. Nvidia is defying gravity. His financial advisor, a young guy named Brad who works for a partner of BlackRock, just told him yesterday not to pull out now, Arthur. We are in a new paradigm. AI is the Industrial Revolution squared. You'd be crazy to go into cash. Arthur should be popping champagne, but he's not. He's sweating. He has an ulcer that flares up every time the market jumps another 1%. Why? Because Arthur remembers 2008. He remembers the dot-com bubble. He knows that the higher the roller coaster climbs, the faster the drop. And deep down in his gut, he feels something is wrong. The math doesn't add up. Arthur is right to be afraid, because while Brad is reading BlackRock's optimistic newsletters, a different story is unfolding in the dark corridors of the financial world. There is a tumor worth $4.7 trillion sitting inside the banking system, a loaded gun pointing at the head of the economy. And while BlackRock is telling Arthur to buy the dream, Vanguard, the quietest, most conservative giant in the room, is silently building a nuclear bunker. This isn't just money, this is survival. To understand the trap Arthur is walking into, you have to understand the two titans fighting for his soul. In the blue corner, BlackRock, the world's largest asset manager. Larry Fink, the man who whispers in the ears of presidents. BlackRock's business model is simple. Fees. They need you to trade. They need volume. They need speed. In early 2024, BlackRock flipped the script. Larry Fink, a man who once called crypto an index of money laundering, suddenly became its messiah. They launched the Bitcoin ETF. They told the world, this is digital gold. Why the sudden change of heart? Because the old economy is drowning in debt. BlackRock needs a new shiny object to keep the fees flowing. They need advisors like Brad to have something exciting to sell. But in the red corner, Vanguard. Vanguard is boring. They don't have outside shareholders to please. They are owned by their funds, owned by people like Arthur. And while BlackRock was throwing a party, Vanguard started locking the doors. When the Bitcoin ETFs were approved, millions rushed to the Vanguard app to buy. And what did they see? Trade not accepted. Vanguard blocked it. Their CEO basically said, this isn't investing, this is gambling, and we won't gamble with your retirement. Then, they quietly pulled out of the Net Zero Climate Alliance. While BlackRock pushed ESG scores, Vanguard looked at the data and realized the politics were too hot and the returns weren't real. So they left. Arthur sees these headlines. He asks Brad why Vanguard is acting so scared. Brad laughs and says, Vanguard is a dinosaur, Arthur. They are missing the boat. Arthur nods. He stays in stocks. He ignores the warning. He doesn't realize that Vanguard isn't missing anything. Vanguard is looking at a chart that Brad refuses to show him. Let's talk about the number that keeps Vanguard's analysts awake at night. $4.7 trillion. This is the estimated amount of cash sitting on the sidelines in money market funds. Total money market assets have smashed through $6 trillion, a historic record. Now, the bulls will tell you this is great news. They say, look at all that dry powder waiting to buy stocks. They say, as soon as rates drop, that money will flood in and push Arthur's portfolio to the moon. That is the lie. Vanguard knows the truth. Smart money doesn't sit in cash earning 5% if they truly believe stocks are going to rally 20%. They only sit in cash when they are terrified. Let's go back to Arthur. Tuesday morning. He goes to his construction site. Steel costs are up. Concrete is up. Labor is gone. The developers are nervous because they can't refinance their loans. Arthur sees the real economy cracking. But he opens his phone and the stock market is up another 200 points. This disconnect is the trap. The market is being held up by a handful of tech giants. But underneath, the foundation is rotting. Vanguard sees this. They know that when the yield curve is inverted for this long, a recession isn't a possibility, it is a mathematical certainty. They are hoarding cash not because they are stupid, but because they are preparing to buy the wreckage for pennies on the dollar. Arthur is the prey. The $4.7 trillion is the predator. The plot gets thicker. It's not just cash, it's debt. The US government is adding $1 trillion in debt every 100 days. Read that again. Every 100 days. BlackRock is betting on the Fed to print money and save everyone. But Vanguard is looking at the bond market. They see the buyers going on strike. Arthur feels it. His boss calls him in. It's not a retirement party. It's a freeze. Art, we have to pause the new project. The bank wants 9% interest. We can't make the numbers work. Arthur feels a cold chill. If his solid firm can't get a loan, what about the risky tech startups? What about the commercial real estate sector sitting on empty office towers? He calls Brad again. Brad says it's isolated. Art, look at the GDP, soft landing achieved. Don't miss the rally. Arthur hangs up. He is paralyzed. This is the tragedy. Retail investors like Arthur act on yesterday's news. Vanguard acts on tomorrow's reality. Vanguard has moved into quality, treasury bills, gold, things that survive a fire. They are betting against the soft landing. So how does it end? What is the trigger? It's a credit event. Imagine a dam. The water level is debt. BlackRock is water skiing on the surface. Vanguard is inspecting the cracks at the bottom. That crack is likely commercial real estate. Trillions in loans coming due in 2025 and 2026. Loans made at 0% interest, now refinancing at 7%. They can't pay. When the default starts, it won't be a bang. It will be a whisper. A regional bank fails. A hedge fund halts withdrawals. Then panic spreads. And here is the twist about that $4.7 trillion. When the crash happens, that money will move. But it won't move to buy stocks. It will move to cover losses. It will move to safety. The liquidity that BlackRock promised will evaporate. Fast forward 3 months. Arthur is 1 week from retirement. Friday afternoon, TV flashes red. A major bank collapses. Contagion spreads. The S&P drops 3% in an hour, then 5. Arthur opens his app. His retirement number is free-falling. 10,000 gone. 50,000 gone. 100,000 gone. He calls Brad. Line busy. He calls again. Voicemail. That is the moment Arthur realizes he was the bag holder. He was the exit liquidity for the smart money. Vanguard's clients, who were defensive, are down 2%. Arthur is down 20%. His cabin in Montana just evaporated. His retirement is pushed back 5 years. Arthur is fictional, but his situation is real. There are millions of Arthurs right now, looking at green portfolios, unaware the ground is shifting. This isn't financial advice, this is a map of the battlefield. The battle between BlackRock and Vanguard is a battle of philosophies. BlackRock says technology saves all. Vanguard says gravity exists. The $4.7 trillion in cash is a vote of no confidence. It is the smart money saying, I would rather sleep at night with 5% than risk 50% on a dream. So what do? Don't listen to what they say. Watch what they do. If the company that manages America's retirement is stepping back from the casino table, maybe you shouldn't be doubling down. Check your exposure. Ask yourself, if the music stops tomorrow, do you have a chair? Because that cash pile isn't coming to save the stock market. It's waiting to buy it after you sell. Are you sitting in cash, or are you all in? Do you trust the BlackRock growth narrative or the Vanguard bunker strategy? Don't be Arthur. Stay awake.